Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar slowly paves its way higher on Tuesday. However, as it gets closer towards that top side level, roughly around 72.65, the market thought twice about continuing. Inking an intraday high of 72.70, the market has tumbled back slightly and therefore sees a slight buckle to the RSI. From a technical aspect, the market is still holding a positive signal, but a weak, that is, with the MACD also seen as a weak signal to support. Any bullish case is unlikely to sustain as these patterns hold, and therefore could see any potential setup towards the top side as bearish, with the market capping around 73.15 to 73.30. No doubt, the closer we get to the main event of this week, which is the Hole Symposium, that is, all eyes will be looking at US Fed Chairman Jerome Powell, who is due to meet with other World Bank leaders when they convey on Thursday and Powell speaks on Friday. The market will be keeping a very close watch to see if Fed Chairman will give any indication of the current potential tapering back of 120 billion of month bond buying program. Markets are likely to be whipping, to just be or more volatile towards we get closer towards this event, so do be on your guard. The support at this stage, if we see a close under 72.05, would give further indication of a bearish case and reignite the downside to 71.65, with the base holding around 71.25. A little bit mixed overnight, with the dollar index rebounding off 92.73 and the euro, which is weighted to the US dollar at 57.6, retreats from the top side resistance close to around 117.80 to 95, where I've outlined here. Nevertheless, keep an eye on these technicals. If they do continue to buckle, then we may see a further slide towards 116.75.80. On the broader picture, I am still quite bullish on the US dollar and therefore should see across the board certain currencies, mainly the euro because it's weighted so heavily to the US dollar, possibly tumble, with the base holding around 116.10.15. Dollar yen, as you can see, many spikes towards that 110 figure area. I believe the market is most probably capped around that sort of 110 figure 20. As we can see here, not many spikes, and also with a long-legged doji, we've got this spinning top. The market is likely to perform further week of play into tonight. Keep an eye on this RSI because it is showing somewhat at least a bit of a step to the upside. I believe the market will probably again set itself up to a potential bull trap, or where the bears are likely to ambush the challenge and see the market drop back towards that 109.40 minus support, with a base seen around 108.55 to 80. Sterling a little bit on the back foot after the previous strong surge from the 136 region. Nevertheless, the market is still likely to be a little bit mixed into the coming event of the Jackson Hole Symposium. Nevertheless, I feel the trend is still very much holding to a bear case. You can draw sort of a line here that's not very strong, but it gives a bit of an idea on how the market's playing towards the bear setup, and therefore could see the slide back towards the base of 135.80. That would mean that sterling yen, as you can see here, there is a long-legged doji, was a little bit apprehensive in taking the challenge higher. Still, the market is likely to be capped around that 151.10 to about 151.70 area, where the blue line is outlined here, and eventually take a trip back towards that 149.70 to 148.80 objective. Well, it would seem at a brief moment that the bulls got their muscles out and took the challenge higher. However, hit a wall of resistance and were bruised by the challenge of 108.6 rejection. That is, keep an eye on these technicals, because if we see a break of this midway point, could see a further slide and therefore reopen the downside towards that 1,765 to 70. Well, I've outlined it here. Until we get a strong close above 1,806, then the bears may step back in quite sharply. Wrapping up with oil, well, I'm actually neutral because it's reached my next objective, which was at 67.5. Two strong candles, and now seeing a little bit of a pause in the actual price action. Nevertheless, I will give it a benefit of the doubt, although I'm neutral, but I would like to say that 68.60 to about 68.90 may be still focused somewhere around this region here, just as a one more attempt. Therefore, keep an eye on this. But the catalyst to the move was all on the back of the US regulators of Food and Drugs Administration, or the FDA, after they gave full approval of the COVID-19 vaccine. That gave the market a little bit of a spurge. And also, if you look at some of the ASX travel stocks have also rallied, especially Qantas today. Nevertheless, still, I feel the market may actually take another step up, and let's see how it plays into tonight. That wraps it for today. Thank you very much for joining me. As always, look out for the interest rate report. I hope you enjoy the rest of the day.